In compliance with international standard on auditing, we'll be looking at some areas of audit confirmation. But apart from audit confirmation as a procedure, there are other procedures in audit processes, and we will be talking about recalculation, inquiry, observation, inspection of documents, and equally inspection of physical tangible assets, recalculation, and reperformance. These are audit processes, but we will be concentrating on a few areas of confirmation in this discourse. And in the next video after now, we'll be looking at importance of positive and negative confirmation letters. And basically, these are two types of confirmation letters that an auditor could issue out. Its usage, where we can use the positive, where we can use the negative confirmation letters, their applicability. These are some of the things that you can expect from the next discussion that we'll be having on GJAMES Associate channel. Gbenga Olatunji FC has been speaking. Don't forget to like us, comment, and subscribe. Tell a friend to tell a friend about finance and accounting knowledge going on in this place. Let us move on. I will be touching on some key areas of confirmation, talking about bank confirmation, talking about account receivable confirmation, account payable confirmation. We are going to limit ourselves in this regard so that this video will not be too long among many other areas of third-party confirmation that we are supposed to carry out. So third-party confirmation actually plays a critical role in audit process. Don't forget, I made a video as regards this aspect, so we are not overflowing it. We just move on. So we are quickly going to explore some confirmation. When we are talking about bank confirmation, it's very commonly used to actually verify the accuracy of cash balance, other financial arrangements with financial institutions that our clients are actually working with. So our client must have relationship with that financial or those financial institutions before we can confirm third partily, if there's any English like that, from them. Okay, so they provide, bank confirmation actually provides auditor with a direct confirmation of account balances, if there are loans, if there are other line items of credits, other related information that ordinarily our clients may not disclose, and sometimes they were not actually aware of those clauses and the like. So the merit of the bank confirmation actually lies in the objectivity and reliability of it, as it provides independent financial institutions direct message to us, that is the auditor. And don't forget, in the hierarchy of evidence that are independently collected are actually critical to validation and expression of opinion of an auditor or an audit firm. And of course, nothing has merit that does not have its demerit. The demerits of bank confirmation, however, is that it may not capture some certain all balance sheet item arrangements or contingent liabilities that may actually arise. Account receivable confirmation also, international standard on auditing is expecting us to confirm debtors balances and the like. So it involves basically direct verification from customers regarding their outstanding balances, payment terms. So this type of confirmation actually helps the auditors assess the collectability, receivability of the receivables, detect potential overstatements if it's there, or fictitious accounts. And of course, if there are fictitious accounts, those confirmation, one of the area is that they will not return. They will not return, the confirmation will not return to client and to us as auditor. And the evaluation of effectiveness of creditworthiness and collection policy of the organization and the creditworthiness of the client, that is the debtor. So it has its merits confirming debtors and receivable balances, in that the their ability to help determine what balance we need to make provision for, that is doubtful debt and the like. And it actually makes and helps us to the provision that we are making to become more of an actual than an estimate. Okay, so the demerits of confirming receivable balances rather is the response may be delayed, and it may prolong the audit process and signing of the audited accounts, and sometimes inaccurate due to customers disputes, miscommunication, because even the customers sometimes, especially for SMEs, the customer, the debtor may not even have accounts. They may not even have the knowledge of their own balance too. So then it may lead to disputes and the like. Though these are some of the aspects of audits that we are actually expecting, and when they arise, it points out to some critical internal control systems and the like that our clients actually must fine tune. Last but I'm going to mention in the area of confirmation is accounts payable. And not that those others that I'm not mentioning are not important, but just because of our time and other factors. Accounts payable must be confirmed too, and is required of us by the regulatory body, by international standards on auditing. So accounts payable confirmations involve requesting confirmation, just like every other, like the bank confirmation and the like, from suppliers. Now, we've dealt with the customer, from our clients suppliers, now vendors, to verify the accuracy of recorded payable against them now in our client's book. I mean, rather in their favor, because this is a receivable in our accounts, in our client's account. So the essence of this, like every other, is to confirm the completeness, the validity of our client's liability now. So it has its merits in that it has ability to identify unrecorded obligations and ensure accurate financial reporting. However, the demerit is that that particular supplier may be reluctant to respond or may provide inaccurate information due to various reasons, which may include strained relationship, lack of cooperations, bookkeeping error, non-existence bookkeeping, etc., etc. We could not overemphasize the importance of third-party confirmation. It gives us independent verification. It helps us to detect error and fraud on time. When we do third-party confirmation, it helps in compliance and regulatory requirements to meet those requirements and enhances stakeholders' confidence in the report that we are making. Don't forget to like and subscribe. Okay, you have liked, you've subscribed. Great. In conclusion, third-party confirmation are crucial because international standard and auditing expects from us to conduct it as part of our audit process, providing independent and objective evidence to validate the financial information that we are presenting and we are signing off. So while there are merit and demerit associated with a few of confirmation areas that I've mentioned and those that I have not mentioned. So their importance, we could not overemphasize it. The reliability it gives the financial statement that we are signing. So by obtaining the bank confirmation, for example, debtors confirmation, receivable confirmation, payable confirmation, we are able to know and detect unrecorded obligations. We are able to detect external obligations that we never knew existed or disclosed, fine-tune our disclosure, ensuring compliance with regulation, fostering stakeholders' engagement and independent review of the account the management is presenting, boosting stakeholders' confidence, especially the shareholders. So as our clients, as organizations actually strive for accuracy, transparent financial reporting, third-party confirmation, especially to be conducted by the auditor, external auditor precisely, remains a vital tool in the pursuit of audit quality and audit validity and integrity. Gbenga Olatunji FCA from GJAMES Associate. Next, we are going to be looking at the positive, the negative types of confirmation letters and their usage and applicability. Please join us. From GJAMES Associate, we have value to life. We have value to your businesses.